Hopefully you guys again had a good trading day. If you didn't, as long as you learned something and you guys are hitting it strong with the details that you're seeing, especially from my last video about volume and what's the importance of volume. Today I'm going to talk about basically what it is we seen this week, which was from Monday and from today Tuesday, and how these trades basically set up. Very simple. Let's just look into it. Let's delete this so we can start. And you can see I already had these levels called out right here on my Instagram and Telegram. You can check them out just to show you guys why and what it is I seen that I'm calling these out. Another very important thing is guys, you guys need to look for different areas when you're trading, not based off of breakouts. I have a video on that. Look for areas based off of volume and the type of style that you trade. If you're trading breakouts, you really need to look into details how breakouts work and how that you can actually profit from it. Be it, you're within the trade or you're against the trade as it breaks out. So let's look into it. So first things I did was for this trade right here, called it on Monday. You can go and look at my Instagram details on here on YouTube. You can follow me on Instagram to see those details. Let's look. I drew a fib from that right there, that high, all the way down to this low. The reason I drew it from here, not from all the way up here, was because this was the last high before this huge sell-off. So that's where I look. I look to see where was the last high, and it was right there. We already got a call. This was, I talked about this last week, so I'm not going to talk about it. So let's look and see what it is that we seen coming into Monday, which was around right here. We had that open and everything came into play. Okay, so you can see this is the fib, the 7-1, still valid because we touched here, went down, came back up, still valid over here. Forget about this trade. So we're coming into Monday when we see this. As we're rising, every time we rise and we touch, we are seeing volume kick in. And these times of days, that's a lot of volume. You can see, go back to 1, and we can look right here. That is a pretty decent amount of volume right there. Compared to that, we increased. Still not a valid trade because the 1 hour close up with a bullish candle, even though it's a hammer. Even though it's a hammer candle, it's still bullish up. You still need the next reaction candle. We still got another one. But what is this telling me? As we rise, price is getting pushed back down by market makers because you can see the volume increasing. We keep making highs, but the thing is these highs are very low. So you can look, you see the high, up, lower high, lower high, lower high, lower. You see what I mean? It's consistent. These kind of details will help you out. And then everybody knows, hopefully by now, that the best thing to look for is on the 5 minutes. So this is exactly what we're looking at right here. So let's zoom in on that, and we can see this right here is that 718. See it all right here. So the problem is right here is it broke. So you can't take this trade. You can't take this trade. Can't take this trade. It came back down. The time of day wasn't perfect, but it's still decent. You could have possibly entered here, but very risky because there's not that much volume to the upside. You can see, look at the volume right here. Wasn't that high previous to this. This is all the same day. This is what we look at. We look at the same day. Is it higher? If it's higher, this, and then you get this kind of reaction. So you have this candle. Let's say they close up right here. That is higher than the previous day. So that would be a valid look to short. So you look to short depending on the reaction. But that didn't happen. So it's still not valid. We come also not valid, not enough volume. And then we get this reaction. So we get this push up. I'm looking to short. So we get this push up. A lot of retail traders would have bought this. Sadly to say, they would have bought this. Not seeing this volume bar. It's a high volume bar right there. And that was almost the high of the day. You can see. We had all the way up to here. It's just this bar right here. That last one that we couldn't break up. I think that was news. Something happened. I don't know what it was. But then we came up. Then you get this reaction. Now the candle is telling us there is a very strong reaction to the downside because of this push up, because of how much all these high volume candle bars right here, I mean these volume bars, these are indicating that there is a lot of selling and stops were hit. So it came and then it came and we had this right here. Both of these candles, this volume bar for these candles are valid, no demand. So it came down. Would enter the trade right here until we see the reaction for the 14 EMA. 14 EMA will tell you a lot. The reaction as soon as we touched was low volume, high enough to indicate that there's something still going on with selling, but low volume, which is a very helpful indicate. And we continued. So if you would have took this trade, you could have took it right here on a more aggressive trade, right here as soon as this candle closed, and you could have had your stop above, or you could have waited until you broke this right here, the last previous push, which was right here. Entering right here, you would have had a stop from 1911 up to here and all the way down to at least around this level right here. All of this. So price came down. So now, let's say we enter the trade. Now we gotta watch the trade at least every 15 minutes or so, and we would see when is a good time to get in, when is a good time to get out. Maybe you want to add to the trade. It all is possible depending on the way you trade. So then we had this reaction right here. See this? That's a lot of volume for that day. It's a big time amount of volume. Too much volume to the downside. This could be possibly buying. The thing is the reaction is the most important thing. The reaction on the next candle is the most important. The reaction was down, so there more likely is going to be a continuation, and that's what happened. We came up, got pushed back, came up, got pushed back. I'm pretty sure this would have indicated to a lot of retail traders that this was just a push down to buy back, and it never closed above here, never could, and it came and it pushed. So, but this right here, for me personally, I would have exited the trade automatically. This amount of volume, also a very high amount of volume, indicating to me that there possibly is going to be, some kind of heavy push up. It would have been a, more of a less aggressive trade, less aggressive to exit right here, and which is not a problem. Still came out with profit. It's not a problem at all. You could have re-entered if you wanted to right here on this pushback down because it couldn't break again, and you would have had that. Couple last things I want to talk about real quickly is stop losses. Stop losses are important to have, but for me personally, if I am able to stay near my chart on the phone, whatever the case is, which is your phone, which everybody is on their phone at least every half an hour, unless you're working, not allowed to touch your phone. You want to put a mental stop loss, not a physical stop loss, because a lot of these big boy market makers will know where your stop loss is, and they will try to hit it and knock you out and then come back in the direction that you were trying to go. Just saying from experience, seen it happen a lot of times. It's not manipulation, it's just they're trying to get liquidity. That's pretty much it. That is for that trade of Monday. And then Tuesday, you had this. Let's look at it real quickly. We had a push down. So then we had a push down, right? So as soon as we had this push down, got out of the trade, you were looking to enter a trade, you could have drew from, I wouldn't draw it from right here because this is too far back for that low, that's push down right there, not too strong. So I would have drew it right here to high, because this is, as you can see, this right here is a double bottom with a pretty good amount of volume for that day. You had also good amount of volume right here, accumulating, all of this which right here was accumulating until it broke out and it went up and it did what it did. Didn't do too much, but it did what it did. So it's a valid fib area. Could have draw it. You had the 7-1. Again, 7-1 is, I'll be talking about fib in a later video of how to and what's so important about it. So you could draw it right there. Came and we had the push, the break. You can see the break right there. And it broke, but look at that volume. That is high volume for that time of day. And you can see, you can go back. That is a very good amount of volume. It broke for that time of day. Came, we had a nice bullish candle after on this high amount of volume, very good. And then you had this no supply all come in. Now I would wait for this one because such an aggressive trade. I'd wait for also touch the 14 EMA. We touched it. It had a little bit of volume, which is good. Didn't get a pushback. We got this little slight pushback. Came in. You could have entered the trade right here or right here for a less aggressive trade. Entered and stop loss down here and rolls this up all the way to about there. Both of these trades I called out on my Instagram as they were forming around right here and around right here. And that is what we are looking at today. Hopefully you guys learned something and you continue to read the markets properly with volume. And every weekend I will try to make a video on how to and more in-depth details on whatever it is I will do the how-to on. Subscribe, please help me out to make these videos. Like, comment if you have any questions, and peace out.